Hey, rich friends, it's your girl Cha Cha reporting live from the Money Mantra, and we are back with another Forex education video. My goal is to help as many people as possible become independent and profitable traders. So if that's what you're here for, welcome or welcome back to my channel. Now, in today's quick video, we are going to be talking about how to identify key levels on gold so that you can find your take profits and stop losses a little bit easier. Now, one thing you'll notice about any market is that it's constantly going up and down, and it does have the tendency to revisit the same areas multiple times. Now, these are called key levels, and your eyes should automatically be drawn to them. Now, I've already taken the time to identify some key levels on my chart, and I want you guys just to pay attention to what happens once the market actually reaches a key level. Now, in this case, we can see that the market was selling. It hit a key level and then the market went up. Now, it created a high. And once it was no longer able to go any higher, it sold down to another key level, which we can see because the market revisited that area multiple times. Now, it's going to be important for you to take a few minutes before you enter your trades for the day, for the week, or for the month to actually mark up your charts and identify these key levels because these will also be your targets for your buys and your sells. If you notice that there are key levels at the bottom and you're in for a sell, these are where you're going to want to take your profits. Similarly to if you notice there are key levels at the top and you're in for a buy, these are where you're going to want to set your take profits. Now, I'm just going to go back to the past and highlight some more key levels with you here in real time so that you can feel more comfortable when you decide to analyze your charts. Now, let's just go back to a part of the chart that doesn't have many key levels identified, and let's do it together. So again, a key level should be a point in the market that your eye is automatically drawn to and you see significant activity where the market changed directions. So we can see how that is a key level. If that makes sense to you, go ahead and drop a 7 in the chat so that I know you're following along. We're also going to highlight this as a key level because the market tapped into it and then it pushed up. And we're also going to highlight this as well. Now you can highlight as many or as little key levels as you want, but the important thing is having the patience to wait for the market to play out and for it to actually revisit these levels. So let's just actually do an example in real time and we'll be able to see how you can use these levels to identify your take profits and stop losses. In this example, we're going to be doing it for a sell. Now, I do just want to say if you guys have been watching my channel and you've been enjoying the content, make sure that you subscribe because in the last couple of months, I've had more than 70% of viewers on my channel have not been subscribed. But the more you guys participate and engage and like the content, the more YouTube can push it out and it helps me a lot and it helps other people to learn as well. So if you're not subscribed and you made it this far, go ahead, hit that button so that you never miss any of my uploads. Now, back to the analysis. Now, this significant level that we have here will be considered a swing high. A swing high is the highest place that you can currently see in the market. And this is really great for swing trades, of course, which means you're going to be in your trades for some time. Now, we see that in addition to the swing high, we've also identified another high. And this is actually going to be our first TP for our sell. Why is it going to be our TP? Because it's another significant level. And we know that the market has a high chance of revisiting that level and then repeating the same action, right? Now we can use this other significant level as a TP2. We can even add a circle here to have a TP3. And we can probably ride this trade all the way back down to TP4 because we've already identified that as a key level and a potential place that the market could go. So I'm going to set my stop loss a little bit above the previous high, and then I'm going to set my take profit at the first key level. So we're going to go ahead and hit play and we're going to see what happens. So we can see that the market quickly hit our TP, and not only that, it came down to a significant level. Now we can see that TP2 would have been hit as well. If we had an additional TP, we can see TP3 would have been hit all the way down to TP4. And this is really cool for something like gold because it tends to drop thousands of pips. So from one key level to the next in about 11 days, that's 17,000 pips, which is a whole lot of pips just for being able to put some circles and lines on a chart. So I highly encourage you guys to try this out. We're going to let this trade, the gold trade already finished, but we're going to let this demonstration play out so that you can see how no matter whether the market is buying or selling, once you've done your markups, you can have success in multiple trades because the market is going to continue to do the same thing. So I really hope that this video was helpful and you guys were able to learn something today that's going to make you a better trader. If it was helpful, just go ahead and drop some sevens in the chat so I know that you made it this far and that you were actually paying attention. And again, don't forget to hit the subscribe button and the notification bell so that you never miss when I post a new video. But that's really all I have for you guys today. Until next time, rich friends.
Yeah.